Hey guys, what's popping? HitoryFX here. Welcome to the 19th episode of the weekly market outlook with TRADEXPROP. Now, in this episode, I will be covering the dollar index, EURUSD, gold, and the S&P 500. If you have any other asset classes you'd like me to cover, just leave a comment in the comment section down below, or even better, join our free Discord where you can connect with the team members of TRADEXPROP as well as myself and other traders that are like-minded. Okay, so quite late in the day. I think I haven't done a recording this late in a bit. It was a really busy weekend, so I could only squeeze time for the recording just before the market opens on Monday. So yeah, let's just get straight into the outlook. We have the dollar index here on the monthly, right? We always like to start with the big currency pair that moves all other currency pairs, which is the DXY. Now, monthly storyline is bullish on this time frame as of now, all the way from this day monthly reject monthly down here, and we are currently within this month of August. Now, we have been in this really tight range right here, this tight price section for since 2022 December. We've been in this large range, and hopefully we get to see a breakthrough of this range bound price section right here, but we are currently quite far away from where that is. So when that happens, I'll be sure to update you guys, so do keep your notifications for this channel on, right? Just click that bell and make sure you can get the latest updates from us. But as of now, let's focus on the current price section right around at this candlestick right here on the monthly. So hasn't closed yet, so we can't really determine if this is going to be a full-on bearish candle, but just looking at how the candlestick has formed, we are around 1,600 points down from the open. Okay, and we are coming into kind of like it's kind of the end of the month. It's like the second last week of the month, so it's not technically the end of the month yet, but it's getting close to that point. And whenever you see a candlestick that is nearing its lifespan, always ask yourself this, like, is it more probable for us to continue in the current candlestick's direction, or are we likely to see a reversal once we tap a higher time frame level based on the current lifespan of the candlestick? And what I mean by that is we have around 2 more weeks before this monthly candlestick closes. We are down 1,600 points. Does it make logical sense for price action to push price up such a large amount of points, break the opening of the candle, and then continue higher? Is that something that is like highly probable? Well, in this case, for me, nope. But we could definitely see price tap a higher time frame area and then see a reaction higher, which may cause us to have a pullback from this price point right here back into the current candlestick's range. So that's normally how a doji or an indecision candle forms, where you see a really thin body with a really long wick, right? We see price open, trade lower, big displacement higher, and we see a close, or it's normally something like this. Okay, but that's just pretty much kind of just using probabilities to gauge market conditions. You know, the most important thing is still to identify your key areas of support and resistance, and not trying to play guessing games with candlestick building. Okay, it's nothing more than a confluence. So as of now, on the monthly chart, we have came down quite aggressively, and we're coming into these areas of support right here. We have this left shoulder, and we have this traditional SNR, well, traditional support right here. So we could see price trickle down, tap this, and this could be the catalyst for the reaction higher, because although price action may be somewhat random, more times than not, it's going to need a catalyst for a reaction in a certain direction. So I'm expecting the price to reach this level and then see a move higher. Meanwhile, we could also come back higher to tap this area of resistance, but that would need us to break past the open to come up. So it's less likely to happen this month, but it could happen in the next month once this candlestick closes. We have tapped this opening of this monthly resistance though, so this was slightly the catalyst for this big move, and likewise you could expect a rounded move higher if that were to happen. So that's the monthly chart on the DXY. Let's drop down to the weekly and see what's up. So here on the weekly, first things first, storyline is bearish from the recent open close tap right here in previous week's candlestick. So we are bearish on the weekly time frame. Now, the way we closed last week, we have formed two new areas of resistance. The first one is this weekly open close, and this weekly SPR, this flip zone right here. So this entire area is pretty much an area I'm expecting price to come up to tap and continue lower from. Ideally, it is likely to tap into something within this level on a daily, but this is just a rough gauge on the weekly time frame, and we're going to refine that down to the daily when we come to it. But as of now, just rough gauge. This price action or this level on the weekly is something I'm expecting price to tap to continue lower. But on the off chance that we do thread lower straight at the weekly open, be aware that we have this monthly support that we saw on the monthly time frame, as well as this weekly area right here that we could see price tap and go higher from, turning our weekly into a bullish storyline. So this weekly level coincides with a monthly support, so definitely a key area to pay attention to. Okay, we have this traditional support and this flip zone right here. Okay, let's just delete that. So still expecting bearish markets because weekly is bearish. There should be no reason for you to be expecting a bullish market as of now, seeing this big drop until we see some more price action develop that showcases to us that we are likely to turn bullish on the weekly. That hasn't happened yet, so just waiting to see how we thread in the coming week. So monthly bullish, but we are seeing a really bearish monthly candle, and weekly is also at the moment still bearish, so we should be looking for high probability shorts. Now this might look like a mess, so let me just clear off some of these levels right here to hide them. So let me just, this is also no longer needed. I think it's just in sync. So this weekly resistance is that area that I was expecting price to come up, tap and reach, but nearer to us, this is where we currently are. The storyline is bearish from this open close rejection right here. We are currently right here. Okay, so next week we might see an open, high, low and close. Okay, since I'm still bearish on the weekly, I am still expecting a bearish candle until we tap something down below here, which is better. So if we don't tap this area of weekly resistance, we have this open close flip right here that price could tap and continue lower from. But keep in mind that this is slightly higher risk because it is just beneath a weekly resistance, so there's nothing that's stopping it from just saying, you know what, I don't want this level, I want to seek higher. So if you would like to play off this level, I suggest wait for price to come up, tap it, give a reaction first before entering your position, and not just blindly setting a limit based off this area. Okay, off of these weekly levels right here, we do have this level, this one as well. We have a few kind of like stacked right here, and we could see price mitigate some of these levels and continue lower if we were to play shorts within this price point right here. So this is higher risk. We would argue you would need some reactions from here, but ideally these two levels that are nested within the weekly zone is a bit more ideal for you to play shorts from. Now if you scroll on the left, what about supports? Well, we have this weekly support here and this monthly support, and we nested here we have a few levels as well that you could potentially trade from. I would prefer the ones that are lower down here. This flip as well is pretty good, but something beneath that level. Since there's so many levels high up, I would discard the top two from just placing limits and just take the ones that are at the bottom, because you could take 2 losses here by just placing limits when price would seek lower prices and continue higher from. So discard the top 2, take the bottom 2. By discarding, I don't mean removing them from your areas of interest, but just place alerts on them and wait for price to come back down to them, and then play off that reaction, if that makes sense. But something to help with the navigation of the timing aspect of things for next week is the economic calendar, right? So this is for the week of August 19th to August 23. We have no news all the way from Monday to Wednesday, but we have big FOMC news and unemployment claims, as well as PMI on Thursday, and Friday we have our good friend Powell speaking on Friday. So you could expect a large move to happen during Thursday and Friday. Monday to Wednesday, you might see lackluster price action compared to days with high impact news. So be prepared that we could see a range during Monday, Tuesday, and Wednesday. But if we do see a large move before Thursday, do keep in mind that that could be the quote-unquote manipulation before the true move. Okay, but like I said, as long as we tap any of these key areas right here, just wait for that reaction, regardless of if you're going to be looking for longs or shorts. Always wait for that reaction. This is just a tool for you to kind of know when we tap into that, because let's just say we tap into the areas above here during Wednesday. Thursday you will see the expansion lower. Why? Because we already tapped into weekly levels as well as daily levels. We could then see this act as the catalyst to push price lower. Okay, so that's pretty much it for the DXY. Let's go to our good friend the EURUSD. I'm 30 minutes into the recording. I don't want to waste all your times. So I want to get through this as quick as possible, while also spreading on as much knowledge as I can. So I don't know why that's there. But anyway, so here we have the EURUSD monthly. Storyline is bullish all the way from this traditional support respect, and this is where we currently are. This is where we currently are on the monthly, and the DXY is inversed with the EURUSD. So we saw that big bearish candle, it translates to this big bullish candle on the euro dollar. Actually, last week we have already tapped this monthly fresh resistance. Meanwhile, the DXY has yet to do so. So when you see this kind of discrepancy, understand that the DXY in this scenario may no longer touch the monthly support, but I prefer to use the DXY as kind of like the leader. So if we haven't touched the DXY support, but we have touched the EURUSD monthly, I want you to be aware that we could potentially transverse higher because there is some sort of discrepancy between the two. Or you may also see SMT happen between the two asset classes. For those that don't know what SMT is, it's basically just divergences between EURUSD and DXY or any other slightly correlated asset. So this is DXY, for example. By right, if we see a higher high on DXY, we should see a lower low on EU, but we may not see that. So that's basically what the SMT or divergence means. You can just look that up on YouTube by yourself. I'm sure there is a bunch of other content, but basically what this means is that we could expect a higher movement for EU, even though we have seen us tap a monthly resistance. Okay, so coming back down to the weekly, let's see what we have here. So weekly storyline is bullish right here from this open close flip tap support. We have a potential bearish signal because we have tapped the monthly. So this is that monthly level that coincides with a weekly. So this is a weekly MTF monthly, and we have seen a weekly reject weekly resistance. So if we do see a daily breakout, we will be in a weekly bearish trend. So this could be an early sign that we are going to continue lower, and we could expect lower prices from there down into weekly supports. Okay, so some key levels to note is we do have this open close flip right here back into a weekly support, but it's so clear to where current price action is, and we have a large momentum candle. We could see price transverse back down into the weekly candles range to continue higher if that is what we are going to do, because as of now we are still bullish on monthly as well as bullish on weekly. So you should be ideally looking for longs until the trend turns sour against you. Okay, we have a few areas of weekly supports. We have this big candle basically flipped this resistance. This one also flipped this resistance. So this entire area is a potential area of support. We also have this open close and this open close right here. Technically this has already been tapped. So it's really just this open close right here that's still fresh. So this key area right here are potential areas for longs if price do come back into them. Okay, so that is the weekly. Coming down to the daily, let's see what's up, what's popping. Okay, so those are the two weekly levels of support, and this is that nearby area of support as well, weekly MTF daily. Storyline currently is, so this is bullish. For change it, my apologies. It's bullish on daily. We have tapped this daily, MTF weekly, MTF monthly. We have seen price transverse lower. This doesn't constitute to a break. Oh, it actually does. Oh, I think my data feed was messed up when I did the forecast just now. So actually the daily has turned bearish from here. Give me that. Turned bearish from this tap right here. So daily bearish, weekly potentially bearish because we tapped a level. The daily could be an early sign that we might be heading down into a bearish trend. But here's the cool part. We also tapped this level here, and this constitutes to a breakout. Give me a second, my internet's whack. So we did see a breakout over here. So reverse that. I want you guys to make sure you are looking at the latest price action. Okay, so this was good, but then we tapped something else and we saw another reaction higher. So always be sure you're looking at the newest areas of support slash resistance so you don't get lost. Okay, so what I'm doing here is just refining the weekly levels down into dailies if they are fresh, and the core idea still remains the same. We are still bullish on all time frames, so you should still be looking for longs. The first one is just weekly MTF daily. The second are this area of supports right here, and this is a daily that's fresh within these two levels right here. So we could see price transfers lower and go higher. If we break this, we could use this as resistance to go lower, to go higher, or if we just come higher, this is these two areas of daily resistances to see price potentially trade lower from. Okay, so if the DXY continues dropping, we could see that tap of the monthly support, and we could see higher prices for the EURUSD up into this daily areas of resistance to see price go lower from. Okay, so the game plan really depends on how we trade during the earlier parts of the week, which you can use this calendar to get a better foresight of. Okay, so that's EU on the monthly, weekly, and daily. Let's go to the next part, which is my favorite pair, gold. Okay, gold moves a lot and I like it very much. So interestingly, we actually made all-time highs last week. We broke the 2,500 mark, all-time highs on Friday. This is when I was asleep. I actually funnily had a limit on gold for buys, but they never got hit on Friday, so that's a bit unfortunate, but that's okay. Next week we have more than enough opportunities to capture, especially the ones I've outlined in this forecast. So for the monthly chart on gold, all-time highs right here, monthly supports down here, really far from where we currently are. So keep in mind that we are likely to just play off the weekly and daily levels as of now, just purely because of how far the monthly levels are. So coming down to the weekly, right? So here we have the weekly time frame on gold. Let's see the storyline. It's bullish from this reaction, this traditional SNR. We saw this tap and we see a large reaction to the upside, which obviously has a daily breakout, seeing as we have had a new all-time high created last week. So we are right here, which is quite literally all-time highs. You know, what should you be looking to do in your own trading? Now, trading all-time highs are tricky. Don't let anyone tell you that it isn't. It is tricky, okay? Because quite frankly, price hasn't done all-time highs many times throughout the past, so there's in itself we don't have enough of a sample size to determine what you could be doing at all-time highs. But a general rule of thumb for any investor is once you see all-time highs in the market, you could decide to just stay out until you see more price action develop. But if you are something more of a short-term swing day or scalper, basically short-term traders, you can look to anticipate price movement on a shorter term basis. So never call tops, trade with the trend. However, do keep in mind that if price were to reverse from here, it wouldn't be weird, because I am 100% sure there is going to be a lot of profit taking sometime soon. It may not be next week, it may not be, you know, the next 2 weeks, but definitely we could see profit taking around all-time highs, which can ensue a sharp and large retracement lower. But this retracement may not be the start of a bearish trend. It could just be a slight and sharp pullback before a continued move higher. Okay, so as of now, the nearest levels that we could see price pullback from to continue higher is this level of support, this flip, and this support right here. We could see price trickle downwards into there and then fly up, you know. as of now, this long wick has retested all of these levels in this price range, so none of them are technically fresh. All right, so coming down to the daily, just because there's not much price action on the weekly, we have to go to consult daily. So well, 1 second, delete that. So as of now, the daily is also, this is a bullish trend. I'm not sure why it's bearish. Bull. All right, so daily is also in a bullish area from this retest right here. We are bullish to go higher. These areas are right above the weekly, so quite frankly, you have to be mindful of these areas. So this is a daily flip, and open close. We could see price come down to tap them and go for sure, but they are above a weekly support, which means they, like I said, just in terms of the hierarchy of time frames, weekly areas are always going to be a lot more, important than daily areas on average. So be mindful when just taking blatant anticipation trades by placing limits off of these areas. You would be better off waiting for some low time frame confirmation right around these areas. But weekly below right here, MPF, definitely areas you could trade from. This is not fresh, but this is fresh, and we also have some of these levels down below here. This flip, this, so this is still good, but these levels are a bit too far away from this weekly level already. So you might not want to take them just purely based off refinements as the weekly, because they are way past the average ATR. Well, actually they're still within range. This is the ATR right now is probably around 370 points, so this is above. This is way out of that ATR range, but this is still within range of that. So these two areas are looking good as refinements of the weekly, and these ones you might want to wait for price to show you a move higher and reaction before taking longs off of them. Okay, so that's gold. Let's move on to the final pair, which is the US500, also known as the S&P 500. So monthly time frame, US500, bullish storyline from this open close respect, and this is where we currently are right here. So look at the monthly candle. This monthly candle looks like what could happen for the DXY or EU or even gold. We could see this doji start forming, because what I'm seeing here is price opened, went higher, big dip downwards, tapped into this monthly level at 5283, big reaction higher. Okay, so currently we have came off of this monthly, not this monthly, so not this one as well, but I mean you get the point. So we tapped a bunch of monthly supports and we're retracing higher from them. We are nearing all-time highs around 5.7k for the S&P. So not much on the monthly other than the fact that we have tapped this monthly supports and also some qualities in order block. So we have tapped those areas of support and we are seeing a large reaction higher. So coming into the weekly week time frame, storyline is currently bullish as well from this traditional SNR reaction right here. SNR reaction. Okay, so as of next week, since we are still bullish on weekly and monthly, you could be looking for longs around weekly support. So nearby we have this support and we have this support, both are which flip zones, and you can take longs into this extreme area of weekly resistance, which is nearby that all-time high. So still holding longs, especially after this big momentum candle. But as always, once you see a big momentum candle, like this. The next week we could see a range, or we could see a retracement. Okay, seeing as how next week is also FOMC, we could see a range from Monday to Wednesday, and then see the true move start on a Thursday and Friday for Malaysian time. Okay, just delete all these. So longs around weekly supports like these are valid, with a caution of your longs at these weekly areas of resistance. Okay, conversely, price could also come up, tap this, and we could see a reaction lower, but you might want to take your profits off at maybe the daily or weekly areas of supports, because we are still strong bullish. Okay, so coming down to the daily time frame, we identified that we are going to be taking longs more so than not. On the daily time frame, actually this is not the reaction. It was, where was it? Let me just check real quick. Okay, yeah, so basically we came off of the daily open close flip right here. We came back and tap it to turn bullish, and so all time frames are aligning bullish. You should be catching longs until we are proven to be wrong. Okay, so this is a weekly area of support with this refined daily support within this. All of these levels are currently, you know, unfresh, I'd say. These levels are unfresh right here. Oh. And then we tapped it right here. So this is a refinement of this upper band, and this coincides with this. So MTF weekly, daily, this is hidden nested daily, this is weekly areas of support. Down below here we have this open close, we have this weekly MTF daily, and we have this area of support just right beneath here. So this entire cluster is an area of support, and when you have such a big area, what do? Well, you could start by just removing this daily, trading off of the MTFs weekly and daily right here. So these three are looking pretty good. Completely discard this daily as well if you want to, but keep in mind that it is there if price were to come down to it. Okay, but either way, you will be looking to take longs to go higher into areas of weekly resistances, or if you tap higher, you should take short-term shorts down to daily / weekly supports, and then take longs again when price realigns bullish, right? So the only way to really avoid getting stopped out on picking the wrong levels to place limits on is really just to wait for the reaction. So price comes down, you know, taps this, boom, boss, chalk, whatever, CISD, breaker, flip, whatever, come back down, enter buy, boom. Something within that nature. Sell set curve, buy set curve. ICT stuff, SMC stuff, whatever. But just wait for that price action confirmation, alright? Well, we're running 33 minutes. Okay, so I think that's pretty much it for this episode. I don't want to keep you guys here for too long. I pretty much outlined what I'm expecting for next week, and just wait for the reaction. Wait for price to give you that trade. Okay, don't chase it. Okay, so yep, I'm gonna, you know, close the recording now. I'll see you guys in the next one. Take care, peace. FOMC, don't blow your account. All right, bye.